we will keep hitting this. We'll keep hammering at this information. Okay. Uh, there is a there is an indicator. Yeah, you know, I always I hesitate to even get this information out because um, indicators are great, but to be able to see this stuff and understand this stuff real time is a lot better than a freaking indicator. Okay, but there's a group of people out there. These are like ICT bandits that only dissect the stuff like to the nth degree, right? So there's an indicator out here that that you can look at, and it focuses on premium and discount pricing, right? And most of these guys run their information on the 5 minute chart, right? And they block the information out like in these boxes that covers the high, equilibrium, and the low. And they look for certain things, right? They want to see what liquidity is being taken, buy side or sell side. If they're biased for a buy, they wait for price to come into discount, and they get in for the buy, and they take the buy up, to the top, right? And if they're biased for a short, they would wait for price to come into premium, and then they take the short down to discount. Now, it's the same stuff, right? It's the same stuff that we already know. We could throw a fib on this up move, and we pretty much know where it's going to come back to. The 78. This is the OTE. All of this is ICT information, right? They've just came and overlaid an indicator system on it, right? And there's this meeting on X space, Twitter space, that we have every week, and you just hear these dudes. It's like being in calculus class, because they know the information so so detailed, like so uh at a level that I've never even heard talked about, right? I want to show you something that I learned yesterday. Um, and this is just for S and Gs. It's not anything that we can do now, but it is something that I can put in my toolkit. On this hour chart, this is one guy who only trades based on the hour chart. He said go back to January 19th. Okay, and he just trades in the indices. But if you look at this January 19th, right, from 18th, from 9 in the morning or 8 in the morning. Okay, it's this bang out right here. So y'all know the kill zone, the ICT kill zone is 8 in the morning. So if you look from 8 in the morning, you catch this long trade that goes up until like 2000. So this range right here. If you fib this range, because it's all green candles, that's what you pay attention to. It could be all green or all red. So if you fib this range, right? If you fib this range, you could have came at any time after January 19th and fib this range, put your OTE on that range, right? Everybody know how to put a array on the range. I'm gonna delete the fib because everybody already saw it. You put your array on the range, you right click that array, you go to settings, or no, you don't go to settings. You right click the array, you add an alert. Your alert says OTE, optimal trade entry. You can put the date if you want, so you don't forget, January 19th. You can put buy it because that's what you want to do. If it was red candles, you would say sell it. You create that alert. Price would have came down January 31st. It would have rang your phone. $250 drawdown. If you looked over here on a 15-minute time frame, I think you see an imbalance. But 250-point drawdown, and you get banged out to, you could have held this trade up here. He said he got out at the top of this range right here. But if you're trading a 0.01 lot size, that's 544 point difference. So it was a 1 to 2 if you held it to the top of the range. If you got in on that imbalance, if you got in on the imbalance, it was he got a 1 to 20 something on that imbalance. So it's just something you can add to your toolkit. You don't necessarily have to only look for this, but whenever there's a range that runs up and it's not mitigated, price doesn't reach discount, it keeps going, you mark that range. In the future, somewhere in the future, price is going to come back to your OTE and it's going to give you a great trade setup. Now, if you notice, the trade setup did exactly what ICT says it would do if it hits your OTE. He could have targeted this high right here. He could have targeted this high and it would have paid him. So all of this stuff is just confluence. It's something that that you should look at going forward, right? This is something that pays you to know, right? And again, you're not going to remember all this information. You're not, even if you do remember, you're not going to trust it. You have to allow this stuff to play out. You have to see this stuff. And once you start seeing this stuff, then, you know, you can't stop seeing it. Once you start seeing it, you can't stop seeing it. And this is the kind of information that pays you handsomely just to comprehend it, to understand it. So this indicator is called FX4. You know, it's probably not going to make much sense to you if you don't trade like ICT concepts. But if you do, the indicator, you know, it's a pretty good indicator. This is the FX4 living in 2 degrees. But they use this indicator. I can show you on 4-hour blocks pretty much. So if you're trading a 4-hour block, and you're biased for longs, you're waiting for the pullback to your equilibrium, and you're taking longs. This wasn't a perfect pullback, but for me, you know, this tap in was perfect because it hit my MAs. I know a lot of y'all don't use MAs, but you know, whatever you use, this information can help you, right? And it's really designed to trade on the lower time frames. So the dude that was kind of given the hold and serve, they're holding court on X. He trades the 5-minute chart. All right, any questions? All righty, good people.
Well, I want to start looking at this. I see the idea behind it. And I guess the report comes out on Friday. Is that what it's saying?
Yeah, every Friday you'll get a report basically of the past week's moves, right? So it's delayed information. You know, it's kind of like this order block, right? We know the order block was created because
Mm-hmm.
something happened in this previous candle, but we understand how to trade it. We wait until price pushes down into our zone, and then we take the trade.
So
But
when in this structure do we get that report?
well, the report is going to be based on a weekly level. So you're getting a report um, from for the past week's information. So
So
those
like it's coming out during New York session?
no, it'll come out at the end of the day. So
Oh, at the end of Friday.
yeah,
Okay.
yeah, and you can't use that information until the next week. But
Right.
the beauty of that information is these are institutional plays, which
Yeah.
means they're going to start adding two positions, you know, over the course of days, weeks, and months. So you'll see next week when we get into the video by the actual people who do it. They're gonna kind of explain to you in detail how to use the report effectively, right?
Right.
So you know it's kind of like you know when you hear Kim say stay out the middle, right? If 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 we're close to support, or we're close to the 52-week low in price, and you see them start buying, then you're going to understand, hey man, they're going to be buying for the next 3 months, the next 6 months, right? So now you started your buy program down here when they started their buy program. And you get to go from 14,000 on up to 16,000 along with them. You know, and you're only looking for those longs. So it helps to understand the direction that the big boys are trading, because all you have to do is sit and wait for the pullback. Hey, I'm sitting waiting for discount. Hey, I know this pullback is temporary, and it works in everything. It works in commodities. It works in metals. It works in indices, right? Pairs are a lot more volatile than those other things. Those other things aren't as sensitive to the real world things, right? We all knew gold was going up regardless. It does fluctuate, right? You know, it is designed to take your money, but gold has been in an uptick in an uptick since October of last year. We've all seen it. It pushed all the way up here. So all this pullback is a retracement. So if you're bullish on gold and you just wait for the run-ups, then you get paid nicely, right? Um, it's more of a risk to sell gold. Now there are times that we can sell gold, depending on the lower time frames and all that good stuff. You can sell gold. I'm not saying you can't, but what I'm saying is the overall direction of gold has been up versus the overall direction of gold heading down.
It's a beautiful thing. I like it.
Yeah, I think when we start, we get that report, the information next week. It's a better detailed way of how you should approach it as a trader. This guy, he did a good job of explaining what it is and how you can use it and what to look for. But
Absolutely. Very detailed. That's what people need. They need detailed information, like information where they don't even need you to explain. You've given them everything in the explanation. Like, and I think we should do a video about futures because people don't know how to set it up. And I think that would be special for the group to have a video like that to lead people into the most detailed way of explaining every little piece of getting into that. Because if you think you like Forex, you're going to love futures because you have access to everything. like even more than Forex, like even with more, because we're having problems with these brokers, right? But there is a way around that, right? There's a way. And everything is just falling into place. Whatever, as long as you understand the basics, you can trade any platform. So there's nothing to worry about. A lot of people have a lot to worry about because it's not getting any prettier. You're going to have a way out of there. And this is the way. These reports are very special. If you can get that type of information, and I see those numbers, I didn't never know the plus and the minus. I mean, I understand plus minus, but I'm not understanding the Chicago Mercantile. I seen the name, didn't know what it was. Now it's starting to. It's time for me to know what that is. I'm dialed in. Todd's dialed in. A lot of people here are dialed in. Right? All we got to do is keep chipping away at it. It's very saucy. This group is totally different. I
For
think we
sure.
should make that part of what we do. I think we should be talking about that Chicago Mercantile report and this report. We see how to read it now, and then we go in there and we read it. Every pair, everything we can possibly get some information on. We get in there and we find it. We can look for support and resistance. That's really what it's saying, and it's that simple. This is a cheat code type of checklist right here.
It is definitely a another level of knowledge that we can use. I mean, you know, that's why I wanted to introduce the report, you know, because anything that you have that gives you an edge is a great thing, especially when you know in advance that that you can get the positions that these guys are getting into. They have all the money. They move the market. If they're buying the yen, then we know that all those JPY pairs are going to sell. We don't have to wait until we look at the news and see that that freaking Chinese real estate company had to liquidate. We know in advance that these guys are expecting something coming down the pipe. They make moves off that stuff in advance, and they have to, by law, report those moves. I mean, if you got the code, you know, you can go and see which moves they made. Then goddamn,
Right. And they also buy the narrative. So what they see, what you see in the news, they plant that stuff.
exactly.
You got to know how to read through that.
All right. Do y'all have a like a pair or pairs that y'all want to break down? I think we got the order block list. Now's your time if you want to break down your pairs. Hey, good folks. If y'all don't want to do it, that's cool. I have I got to go and I got to drive to El Paso to pick my brother up. I just
He
thought,
said, hey,
what's that?
somebody said GA.
Mario, you say you're looking at GA. Do you want to break it down? You say you see a short on GA. Does anybody disagree with the short, with the idea of this being a short?
Let me see. What's it for? I mean, the daily.
All right, I'm gonna read. Hold on, I'm gonna read this dude. He said, I strongly believe that between 192.93 and 193.22 will stand as support, pushing it for a long ride up to 196.44.
That's crazy. That's exactly what I thought. Now, I thought it was a sell, and then I started seeing the buy. We were talking about it all through the group, and I saw the buy. I'm like, okay, let me think about this. Now, this is why you always want to play whatever your advantage is. If it's buying on the advantage for the buy and it's at support, you need to try to figure out how you can find the best buy that you can get. And when it's at resistance, you want to try to find the best sell that you can get. That's how you just be clear on both directions. That's what I like to do. I like to play both ends. Just do it when it's time, right? And then you find yourself catching both positions eventually, because you're not going to let it just get past you like that. Whenever you have an opportunity for that buy, I caught the GA buy. I did catch it on Friday.
I also got in for the buy. I don't believe it's coming this high. In
196 is nice. It's premium. So if it does, I will be looking for the sell at 196. But
I agree. I think, and it's not that I don't think it's going that high. I think that right now that that's too high.
Yeah.
There's definitely, you see the imbalance. It gets wider and wider as you go down. The only problem I have with that, the only problem I have with the idea is we broke these lows. We broke these lows. We got to trade back into this leg of structure, right? Right now, we reacted off this level. And what I like and dislike about price is you trade it in this range. And if you think about this, if you look at this range, we took liquidity, we took it from the bottom first, we went up and we took it from the top. And if we were going higher, I would want to see a body close above this high instead of just a wick. So when we just get the wick, the further I drop down in time, we come down, break structure here, right? Which will be a chalk. So we come back up. We're either going to break this high or break this low. And I like us to push down and break the low. Now, I don't know that this will actually play out, but my THOTS on it is we push down, we break structure. Here's your level. We break this level. We come back up. We don't break that high. So I like to throw my little fib on here and see what Fibonella is talking about. You know, she's a pretty honest girl, Fibonella. And it hit the 78, bro. Once I saw that 78, I'm like, let me just throw this sell tool on here because I'm trying to don't stop, get it. And if it sells, especially if we break this low, then I'm targeting these lows right here. I am biased long run for this to sell, but that's that can be argue either way. Some people see long, some people see sales. That's how the market works. But if it breaks this high, then this idea is trash. But if it stops and sells, then this idea is good. You can use this low right here as TP1, and then you got the rest of these lows, TP2, TP3. But for me, if we break this low, I'm waiting. I'm taking all my money right here, because that's when I feel like I'm short on it. You know, I know everybody else has their own opinion, but I like the weekly chart too, because if y'all remember, baby, come back. On this weekly, we had the inside bar. We had the inside bar at resistance. We didn't body close above the bar. We wicked, which means we grabbed the liquidity and we closed below, which makes me feel like we're going to sell. You know, I mean,
I like that. Like that. This is where you get that sauce. That's that sauce right there.
yeah, it doesn't mean that it's going to play out the way I said it's going to play out. It's just how I'm looking at it. You know, I also appreciate the people that feel like it's going long, because again, if you don't see other ideas, then maybe you don't know it's an imbalance right there. You know, maybe you're just looking at, well, you know, Todd said if it breaks these lows and it has an imbalance, we'll trade into that imbalance, which it did. This is the imbalance. Look, where that wick is, if you put this candle right here on the weekly, it almost tongue kissed it. You know what I'm saying? That's about as close as you can get lip to lips. It smacked that imbalance, closed back below this level, which would indicate a liquidity grab if you listen to your boy ICT, and the market should push the other direction. And I'm here for it. I'm here for that push in the other direction. Any other questions, comments?
Actually, it's a build an imbalance that is not a liquidity grab. The ICT would be hunting your ass down.
No,
I'll tell you that.
Yeah, I'm talking about this is confluence. It did feel the imbalance, but ICT will tell you that whenever you have a level and there's a wick that exceeds other wicks, these wicks already took liquidity. The only reason that you would need to wick a wick is to grab liquidity. Those are his words, not mine. I don't care who you have working at the Chicago Mercantile.
My bag, son, my bag.
So you can trade this up if you want to.
Yeah, these are the types of positions that we play for. Like when it's right at the level, like the position is so excellent that you just put in the stop loss, just pips away. That's the best time for a trade. And a lot of people don't even catch a 0.01. They're afraid of the trade. There's nothing to be afraid of. When it starts hitting levels like this, you got to at least come out of here with a 0.01. Set an alert, whatever you need to do. We go over all this analysis, very detailed stuff right here. Everything's healthy, right? It can get volatile. It can sweep both directions. Whenever you get a great high position, you go for it. Whenever you get a great buy position down low, you go for it. You challenge yourself to catch 78% retracements, 88% retracements. That's why they're called that. If you can't do anything else, learn how to do a 78% retracement type trade. And that's all you do, is look for that. Now you're just doing the safest thing you can do. Win or lose, you're doing something fairly safe. And then you'll get used to how it looks, how it feels when you're in that. People don't know to stay at the 78. Oh, I'm going to get in at the 50. Well, yeah. Okay. Now you're saying I want to elevate my risk. Now you're getting torn every which way but loose because you decide you trade the 50% retracement instead of the 78 and the 88. That's what you do to yourself when you don't have to do that. All right, just keep it simple and your success rate will go up. And then you'll be preaching how you should be taking the 78. People are like, oh, I got to get in the trade. I got to get it. Well, yeah. Well, look at 100 pairs and take the ones that are at the 78. Leave the ones that are not at the 78 alone. You can do it any way you want it, but you have to do it right.
For sure, for sure.
So man, I'm just stacking crypto right now. Not the trading game for a minute. I might take a couple of spots. That's about it.
Yeah, Bitcoin shot out of there like a rocket. I caught it at discount.
Yeah, it's probably gonna come back one more time, I think.
Yeah.
So speaking of coming back to it,
I didn't hear that.
did you hear it, Todd?
No, I didn't.
Dude, you are slow. Did y'all hear that?
No.
I heard a little bit.
What'd you say?
It was your favorite song.
What's that?
Spending all my night.
Come on, man.
When the morning comes, I'm right back where I started again. Trying to forget you was just a waste of time.